Good morning, everyone. Good afternoon, good evening, and welcome back to the breakfast show. I hope you all enjoyed that intro. Yesterday, we debuted that intro with the whole Netflix, Warner Bros. Paramount thing. I was like, you know what? Maybe let's create some cinema stuff here. So, hope you enjoyed that. In today's breakfast show, we have some things to talk about. We have Nvidia stuff to talk about. We do have CoreWeave, we have some price target upgrades, downgrades, you name it. And then I do want to put two interviews from yesterday on, one from Dan Ives talking about this whole Nvidia China situation, and then two other analysts talking about 2026 and the market situation. What did I use for the intro? It's mostly Grok Imagine with two or three VO ones as well. I'm mixing both of them to see who gets the better results. Grok is usually the contrast is very dark, I would say, but it does a very good job. I mean, the fact that, first of all, the background, of course, is not a real background just yet, but the fact that it makes the characters walk and jump on the couch and make the couch, I mean, the pillows physically move based on the touch is, every time I watch it, I'm like, it's insane. Crazy stuff. But yeah, now I did try to put Goku on, but it didn't look good. So I'll update over time. New characters will pop up. So we shall update it and see how we can make things better, because that's the main point. It's to try and make things better. So right now, let's have a look at the pre-market action. So if I can do this correctly, voila, this is it. This is right now pre-market. It's a bit like yesterday, I would say. A bit like yesterday. You saw Garfield. Yeah, I do like the Garfield one. I think Garfield one turned out to be very, very good. So this is how we are maybe going to open the market right now. This was yesterday. So yeah, some stocks did, let's say, end the day greenish. I mean, Nvidia was red at one point, turned out to be green because of that news from China. But right now, pre-market, it's a bit mixed. Even if we go and look at our list here, Rubrik is down 2%. Yesterday, after hours, it was down more than that. I couldn't find any reason for that. So maybe when we'll open the market, some things will come out. But right now, I didn't really see anything Rubrik specific. Then on the positive side of things, Sezzle is up 6.3%. Yesterday after hours was up 10%. I think it's because it got included into the small cap 600 or something like that. Plus, apparently it has a 24% short interest. I didn't know it was that high, so could be a reason. But yeah, all in all, way more red than green at the moment. Then, if we go and have a quick look at the update for CoreWeave. So yesterday we talked about the $2 billion convertible senior notes offering right now we're getting information that it has been upsized to $2.25 billion. So I assume there is a lot of demand, and why not? Why not raise more money, buy more GPUs, or maybe build the data centers faster? Something in the 10K of rubric caused the decline. Okay, we'll try and find the reason for that. Then as for, since we are talking about NeoClouds, we do have some report news with regards to Nebius. So Gen Z investor on X found out the following thing. So Nebius has just acquired 398 acres of land in North Point, Development's East Date Commerce Center. I mean, it's a long ass name here. Near Missouri. Okay, Missouri. Reports came out yesterday after officials in Independence approved a $2 billion power generation plan last Friday. Nebius is expected to construct a huge 8 to 10 data center campus with capacity expected to be in the 800 megawatt range. So huge plan for Nebius. Again, it's a plan at the moment, but if it is, well, if they are going to start building and this becomes operational, this is a huge thing for Nebius as a whole. Of course, all of these things cost quite a lot of money, so we were not surprised when the Nebius, Eco Reef, and Iron, they all raise money at these stages. You shouldn't be surprised, and you should maybe even expect that to continue moving forward. Then yesterday I spoke about Grab on the channel. We have your benchmark. They see favorable fiscal year 2026 setup for a Grab. We recently hosted the Grab IR team for a virtual NDR with investors and came away constructive, supported by a positive outlook for fiscal year 26. The company is targeting sustained growth across its core segments, deliveries and mobility, while maintaining stable incentive levels. They also said that the financial side of things should turn profitable second half or towards the end of 2025. So some positive commentary here on Grab. Stock is still around $5. All of these stocks will collapse in 2026. The NeoClouds, it's a Ponzi paradise. I disagree. Maybe some of them, but the others are generating quite a lot of revenue. Quite a lot. We did have some, we're not getting the PPI data, right? We're not getting the PPI data this week. They're skipping it. So we will have to wait until January to get the November one. Not great, but I guess it is what it is. FOMC rate cut tomorrow, not today. ADP private employer added 4,750 jobs per week. I don't know what the estimate was, but the whole market move, I guess, will happen tomorrow, when we'll get a rate cut and then maybe or maybe not a hawkish / dovish comment from Jerome Powell. Moving on to some Google news, more specifically Waymo. So Waymo is growing like crazy. Waymo is now providing over 450,000 paid robotaxi rides per week. That's up from 250,000 per week in April of this year. They also have 2,500 robotaxis in its fleet. In San Francisco, there is 1,000, Los Angeles 700, Phoenix 500, Austin 200, and 100 in Atlanta. Now, if we go on Waymo's website, you can see where Waymo is driving. So serving riders in these places right here. Up next are all of these places. Yes, even London, UK, but they did post yesterday that Waymo started to drive already in London. And you have driving experience in Tokyo. So yes, they are already quite big in the United States. They are also expanding internationally. Very, very, I wouldn't say undervalued because we don't know. I mean, other bets for YouTube, other bets for Google still losing quite a lot of money, but they're scaling and expanding rapidly across the United States and now starting internationally. Yes, of course, Waymo is still losing money. I mean, the amount of R&D that went into this, you're not going to recoup that investment with just 2,500 robotaxis. But it is already a very good start. And it's, I mean, Waymo today is the worst that it will ever be. Think about that. Moving on to some Dan Ive comments on Nvidia, because Nvidia got the okay to sell its chips again to China, H200s. So let's have a listen and let me know if you can hear it well.
We are joined now by Wedbush star analyst Dan Ives. It's good to have you here.
Great to be here.
How significant is this?
It's a watershed moment if it plays out, and I believe it will. Look, I mean, our whole view is you don't want to give Huawei and China Tech more power. By taking Nvidia out of that market, that's what they've done. And with that, you're talking about what could be 15, 20 billion a year. And I think this shows, and we've seen it being in DC a bunch the last few months. I mean, you're seeing changing winds there. I mean, there's a recognition that you have to give Nvidia that market. You have to let that open because otherwise China Tech gets an advantage. And for the first time in 30 years, U.S. Tech is ahead of China.
Well, first of all, you call it a watershed moment. The stock's up 1%. I mean, really? Watershed? Yeah. Stock's up 1%. If it was such a watershed moment, wouldn't the stock be up more than 1%?
No, I mean, look, I view it as we go into the coming weeks, we're going to look at this as more and more China opens up. Even as Trump's going to do the visit there in April, I think this is more the tea leaves because I view it, this is just the start of what's going to be an opening of that relationship. And I expect more and more. NVIDIA is going to be able to sell into that market. And that's not baked in. I mean, if you start to think about from a street perspective, the view is China very, very cautious. I'd say negative in terms of what that's going to ultimately be. I'd say the street's underreacting to what I believe is really going to be an opening up of what's going to be a golden opportunity for NVIDIA.
Christina laid it out, though. It's China could very well be like, thanks, but no thanks. I mean, the market seems like it's not willing to take a big leap forward because there are many things that are still at play. Yeah, not to mention the fact that these are, already like 18-month-old outdated chips from the highest quality ones that NVIDIA produces anyway.
And still, I think 1 to 2 years ahead of where Huawei is. So it might be just being in Asia for 3 weeks. You go to any China big tech company, whatever they say publicly, at the end of the day, they want NVIDIA chips. There's only one chip fueling the AI revolution. I think this just signifies cool relations, and I think obviously a lot more positive between U.S. and China. That's bullish for big tech. It's bullish for you. It's bullish for AMD and others.
Okay, so let me ask you this. Would you admit that we have started to see some dispersion among the hyperscalers and among the mega caps on how the stocks are trading and how each one individually is now being viewed rather than a monolith? Would you admit that?
Yeah,
okay.
and I definitely.
Okay, so you would. So I'm wondering, at some point, can you have an outperform on an Apple, on an Amazon, on a Meta, on a Microsoft, and on an Alphabet? You're judging all of them equal when telling me that this dispersion that we've witnessed is legit, it's real, and it may continue to be the case. How would you come back with that?
Sure. Well, what I'd say is that when it's the 6th, 7th inning of this AI revolution, then you're going to have to separate out, and there's going to be clear winners and losers. Where we are today, I said it's top of the third, one out relative to this AI game. And when I look at the consumer AI revolution, it speaks to our Apple in terms of increased price tag, hasn't even started. So when I look at where Meta and what we see with Alphabet, what we see with Apple, I think that's just starting. Now, I think you will see the market ultimately, just like Microsoft right now and Oracle, almost putting in the penalty box. But I think that's the wrong way to view that. And I think you could pound the table or be much more bullish on certain mega caps versus others.
Okay, enough of him for now. So Nvidia yesterday was up 1.72%, was actually up a little bit more than that. Pre-market, it's up 0.22%, so not by much. The other chip stocks, ASML is down 1%, Micron down 1% or so. Intel is up a tiny bit, and same for AMD. Look, again, H200s, yes, they're not the newest chips out there, but there's still a lot of demand for H200s. Some of you in the chat make a good point. Okay, the US is now allowing these chips to be exported to China, but maybe China will just say, no, you're a Chinese company, you're not allowed to use Nvidia chips. Although we've had reports come out that say that a lot of these Chinese companies use Nvidia chips, but just they do the training outside of China. And again, since you don't really need to have the data center and all of it next to you, you can do the training, I don't know, the country next to you, doesn't matter because the training is done there, the data comes back to you, you do the inferencing locally, who cares? I think there is just going to be a lot of these things happening, but it might also be a little gesture like, okay, look, no exports control on H200 for now, opening the door for more discussions. It's possible. China is anyways a $0 business for now, for Nvidia, for AMD. So whatever comes next is just extra money that will flow to Nvidia, to AMD, maybe to some others as well. But yeah, the fact that the stock did not really move yesterday probably is because, like some of you have said in the chat, is because, okay, you're allowing these chips to be sold in China, but who says that China allows these chips to be bought for Chinese companies? So I get the point. But anyways, Nvidia maybe cannot fully replace the China business, but they are expanding. I mean, Saudi Arabia, UAE, and other countries out there that are buying massive amounts of GPUs. Rob asks here, are NeoClouds prohibited from selling compute to Chinese firms? Good question. I would assume, but then again, good question. I wouldn't know. I would not know. Yeah, good question. I don't know. In the meantime, looking at the NeoClouds, they're all red. They're all red from now. As for fintech players, we have Nu that's down 1.6% at the moment. So we did have on Friday Nu come down 5% and then another 0.4 yesterday. Okay, interesting. PayPal is flat, well, down to flat. Yesterday it was down 1.8%. Sezzle still up now, 5.5%. Apparently it's because it's going to get included in the here S&P Small Cap 600. So that's why. By the way, it's up, what is it? 40 something percent since the bottom mid-November to whoever bought it then. Congrats. Nice gains right there. Pagaya was down yesterday 0.2%. Now it's down another 1.4%. SoFi down 8%. Again, pre-market, we've seen the huge changes. As for Netflix, yesterday it was down 3.4% at the end. It is very close to being oversold. And right now it's up 0.3% at the moment. SoFi and now annoys you. What will they do with the money? Dilute and move on. What is this monster? Well, the previous time they raised money, they diluted, but not really, since EPS increased thanks to that. If they can do the same thing, I couldn't care less. Couldn't care less if they can do the same thing. If you're raising money and thanks to that, maybe the debt profile changes, maybe you're accelerating revenue and EPS, MicroStrategy, sorry, then I don't care. I don't care. Plus, I mean, the stock is still up 100% this year, so. Okay, moving on, we have another, well, maybe two analysts, I think two analysts. Yeah, two analysts talking about whether or not the bull market will continue its run in 2026, right? We've had an excellent year. We've had an excellent year so far. I mean, across the board, we've seen green and dark green, bright green, you name it. No, it will be communicated. I just think they cannot say anything until it's officially closed, right? Because I think what was it supposed to close yesterday? So maybe we should be getting an announcement today. And again, based on their track record and execution, I'm not here to doubt Noto and the team. So yeah, the offering is expected to close December 8th, so yesterday. So maybe we're going to get something today. But anyways, look, this is the year-to-date performance. I think we're all quite happy with our performance this year, last year, and even 2 years ago. So can we continue the bull market in 2026? Some people have very big targets for 2026, other a bit more realistic. So let's see what Wall Street is thinking.
Our next guests say 2026 will be another bullish year, but see more bumps in the road. Joining me now, Victoria Green from G Squared Private Wealth and Kevin Mon from Hennian and Walsh. Guys, welcome. Kevin, are there any more major catalysts left for the market this year, or should we just sort of count on these minor moves back and forth?
Yeah, as I understand this, there may be a hawkish cut coming up on Wednesday, and that could bode well for the markets, believe it or not, John. As going back to 1950, the Federal Reserve has cut interest rates on 23 different occasions when the S&P was within 2% of its all-time high, as it is right now. In all 23 instances, the market moved higher over the next 12 months by an average of just under 14%. Now, of course, this time could be different, but I do think the bull market continues to make its run and notch its fourth consecutive year in 2026, but there'll be many more bumps in the road along the way and much more short-term volatility than we saw in 2025.
Before continuing, let me just show you some data from the usual Subu trade on X. So this is basically what has happened previously. And good morning, hola, buenos días, buenas tardes a todos who are joining us today on this fine Tuesday. So this is basically the data. The S&P 500 when a rate cut happens while the S&P is within 1% of all-time highs. You can see that the market closed higher 93% of the time, 9 months later, and 100% of the time a year later. Of course, in the short term, it's a bit mixed, right? A week later, 44% of the time we are green. So, of course, more red than green is the probability. Same thing for 2 weeks later, then 50-50 chance a month later, and then we get into an area where things look a little bit better. 73% of the time we were green 2 months later, 71% of the time we were green 3 months later. But if you really look at, let's say, where we're going to be at the end of 2026, then you should just focus on the last two columns right here. 9 months to a year later, 93 to 100% of the time, we ended up being green, and on average, S&P was up between 8 to 15%. If I can sign a paper today that says a year from now, the market or S&P is up 8 to 15%, I'm signing it right now. I couldn't care less that maybe we're going to get 10% pullbacks or 15% pullbacks or 5%, whatever. In the meantime, I'll take the opportunity to just buy more since I'll know we are anyways going to be up at the end of the year. So just wanted to show this data, again, what has happened before might not happen in the future. It's very possible that suddenly we are going to be the first data point here where we are going to be red. It's very possible. It's very, very much possible. Now let's continue.
Tori, we also get Oracle, Costco, and Broadcom this week. Of those, which do you think is the most consequential, given, I mean, Oracle has been an AI story that's popped and faded. Costco, very important read on the higher end consumer.
Sure. I think it's Oracle, because if Oracle blows it out of the water, they can kind of silence all their naysayers and revive the AI trade and say, hey, everything's well and good. We can support this CapEx. We're not concerned about CDS. They really have to show aggressive revenue growth and aggressive future growth. They need to have a beat and a raise. It can't just be a beat. But this is the show me time for Oracle. Everybody's doubting Oracle. Oracle needs to come through here. That would go a long way to soothing some of these AI valuations and AI CapEx and debt concerns that have dragged the market a little bit.
Should we expect that, though, Victoria? Because, I mean, their last quarter where the stock popped wasn't great on the quarter itself. It was on their projections for the future.
Yeah, if they give a massive raise and say it's coming down the pipeline, we're going to be able to pay for all this debt that's getting issued, I don't see a problem with that. As long as they beat EPS, it's going to be heavily weighted to what's coming down the pipe in the future. Is the demand there? Is the revenue growth there? And are the margins there, right? That was the other knock. If they're doing all this work with OpenAI, but it's minimal margins, there was some talk, I think FT had said, hey, they're basically paying, OpenAI to host for them. So Oracle needs to come through and say that revenue growth is here. This 5-year plan we're laying out is still intact, if not better off than we thought it was going to be 3 months ago. It's going to go a really long way to soothing investors.
Kevin, back on the macro side, you don't think investors should count on more cuts soon after the one we expect this week from the Fed?
Yeah, I mean, if they do cut interest rates this week, that moves the Fed funds target rate into a range of 3.5% to 3.75%. As I understand it, unless they update it this week, their neutral rate is 3%, which would suggest to me, if I'm doing the math right, we only have 50 basis points more of cuts to get to neutral, or 25 basis points cuts. I don't think we get anything in the first quarter. Remember, that's going to be Chair Powell's last 2 live FOMC meetings before he's replaced his chair. So we may only get 1 rate cut in 2026 and 1 in 2027. The
Even
big outstanding vote here, that could change everything. Once that new Fed chair comes in, we expect them to be more dovish, and perhaps we get that all in 150 basis point cut when that happens in the spring.
Okay, so a couple of things. First of all, Oracle reports tomorrow after the market closes. So let's have a look. Let's have a look at Oracle. We have Broadcom on Thursday after the close. Now with Oracle, like the lady said, here you can clearly see what has happened 3 months ago. Stock increased like crazy because of the huge RPO number, right? A huge RPO will probably be over $1 trillion this time. And then we've had here a drawdown. A drawdown all the way, 40% drawdown. We're now down 32.8% from the peak back then. Now, if we go and look at what the market expects Oracle to report, revenue-wise, they're looking for a number closer to $16.1 billion. Free cash flow is non-existent, and it's going to be non-existent for quite a while, which again raises the questions, or the question, how are they financing all of this growth? Right? This is the question right now. EPS, we're looking at a number closer to $1.64. Now, if we go back to Oracle's last earnings report, we do this, we can actually see, right, this is the remaining performance obligation reach $455 billion. Again, this is not a contract, this is just their current their RPO. Like I said yesterday, and I think Wall Street is now saying the exact same thing, it's not enough to tell us what they think might happen 5-10 years from now. Wall Street wants reassurances that over the next 12 months, Oracle's business is going to be producing not the goods, but at least some goods, right? Because yes, OpenAI, XAI, Meta, Nvidia, AMD, etc., they're all dealing with Oracle. Now, if we looked at the guidance, so for fiscal 2026, Oracle projects operating income to grow mid-teens, accelerating further in fiscal 27. CapEx is anticipated to be around $35 billion. Again, CapEx $35 billion, there's no free cash flow at the moment, primarily for revenue-generating equipment to support massive RPO backlog. Oracle Cloud Infrastructure revenue is expected to grow 77% to $18 billion in fiscal year 2026. By the way, they are already. They're going to report their Q2 fiscal year 2026. So $18 billion with ambitious long-range projections reaching $144 billion over the next 4 years. Again, this is great. Okay, cool for the next 4 years. But in the meantime, what are you going to do? Right? In the meantime, how are you going to finance all of these huge expansions? The company remains confident in achieving full-year total revenue growth of 16% constant currency, with expectations for further acceleration in a top and bottom line growth beyond its fiscal year. For Q2, revenue is guided to 12 to 14% growth in constant currency, total cloud revenue 32 to 36%, and non-GAAP EPS between $1.58 and $1.62. Market is expecting around that number here as well. So it's a big deal for Oracle. And Maison Shell, thank you very much for the super chat. You probably wanted to write something and the message did not go through. So if you want, just write a normal message and we'll pull it up from the chat. The whole rate cut thing is getting tedious. Everybody knows rates are coming down. Correct. But I think right now we're more in a, okay, we know rates are coming down. It's not about rates coming down anymore. It's more about the comments, right? Why are rates coming down? Is it because, okay, rates are still too high, situation is not that bad, and so we are okay getting the rates down? Or is it, situation is getting worse, we are way behind, let's cut rates? I hope it's option number one. Let's see, what do we have? What do we have for you? Yes, apparently. Yes, exactly. The dot plot for, I mean, what is it for next year? Only 1 or 2? What was the previous? The previous one showed 1 or 2 rate cuts for next year. Forgot. But I got some breaking news here. Okay, maybe not. Yeah, maybe breaking. I don't know. But apparently, someone posted. Yes, I'm sorry. I have to talk a little bit about my PayPal. A little bit. So apparently, this account right here posted the following thing. Online payment system PayPal is close to completing a deal to become the NFL's first peer-to-peer banking sponsor. The deal represents the last rights held by Visa in an expiring omnibus rights arrangement. So he shared the 2 links here. And number 1 is this. This was, now the question here is this December 3rd or is this March? Because you Americans need to flip everything on its head. But anyways, PayPal is closing in on NFL banking sponsorship. Could be, because someone asked in chat what would be the catalyst that maybe makes PayPal move. And maybe this might be it. Maybe this might be it. We already have the Big 10 and Big 12, right? We already have that announcement for the year. So the NFL finalized a segmentation strategy, securing PayPal as inaugural peer-to-peer partner. For some strange reason, PayPal does not advertise this, or maybe they're waiting for a big reveal. So the NFL is reportedly close to finalizing a deal with online payment giant PayPal to become the league's first peer-to-peer banking sponsor. This significant agreement is the final piece of a strategic commercial overhaul, successfully monetizing the rights previously held under a single omnibus arrangement with Visa, which expires probably, at the end of the first quarter of 2026. The strategic rationale for the NFL organization is clear. Maximize revenue extraction through category segmentation by breaking the monolithic financial services sponsorship held by Visa into 3 distinct high-value streams: official banking sold to US Bank, credit cards, they're going back to American Express, okay, and now peer-to-peer digital payments. The NFL confirms its dominance in monetizing every available asset. For PayPal, the sponsorship represents a significant elevation from its global sports program. The recent one we got is, of course, the one with Liverpool. Yeah. While the organization already has a strong presence in US college sports, collegiate sports, I didn't know this wasn't a word, but okay. Facilitating payments through deals with Big Ten and Big 12 conferences, and holds the jersey patch rights for the Phoenix Suns. The NFL partnership is a massive leap into the most recognizable sports league in the United States, probably North America. The deal will allow PayPal to deepen its integration across the league's vast digital commerce platform, where the payment system is already accepted for licensed merchandise on nflshop.com. This, I mean, why? I don't think this is going to cost PayPal a fortune. I think this is going to make PayPal some money, a lot of money actually. Because if suddenly, I mean, all of this is to increase TPV engagement with the PayPal ecosystem. Now, of course, it says here peer-to-peer banking sponsor. Being a sponsor, of course, they're paying, right? They're paying to be on the Phoenix Suns jersey. They're paying for that. But in this case, if there's the sponsor, I don't know how much they're going to pay for it, but it's a strategic partnership, meaning being a patch on the Phoenix Suns jersey is one thing, but being a sponsor plus you have a professional business relationship means they're going to use your service, which means more money flowing into the ecosystem that can be monetized, more people using, in this case, maybe PayPal, Braintree, and Venmo, but more specifically here, the peer-to-peer side of things. So yeah, I don't know. I guess it's not finalized just yet, which is why we're not getting any info from PayPal. But if it does get finalized, I'm pretty sure that all of us PayPal bag holders are going to retweet this thing into oblivion. That's for sure. Because if we look at PayPal right now, it doesn't move, which again is normal, because this news is under the radar and it's still not finalized, so nothing's official just yet. But it's, I guess if it does become official, I guess it will move the stock, because the NFL in the US is quite big. There are some games internationally. I think you played in Europe. I think in Germany there was a game. I think at the Tottenham Stadium there was a game. Maybe in Brazil as well. So it is growing, but not by much. You think PayPal management is shorting the shares? They seem to be trying to get them lower rather than higher. Well, yes, I guess, again, it's for long-term shareholders, not option holders. It doesn't change much because you can just buy way more shares at these prices, a lot more. But if that were the strategy, you would also accelerate the buybacks by quite a lot. And you know me, I've been very vocal about that. So yeah, we'll see. PayPal will not announce in fear it may raise its stock price. Well, if PayPal will not announce it, then I will use every channel available to make sure everybody knows about this. But yeah, at the moment, still Still in the low 60s. Then moving on to the next topic, which, where is it? Yeah, this thing. So Meta is going from llamas to avocados. This is, yeah, not a sentence I thought I would be saying, but llama and now avocado. So they're prepping a new proprietary AI model codenamed Avocado for Q1 2026, the successor to its open source Llama family. I mean, I don't know what the what the rationale behind this was, but yeah, it's a funny thing. It's a funny thing. Mbappe asking the good questions again. Netflix or Adobe if you were to open a new position? Ooh, I mean, Adobe reports tomorrow, so I guess I'll wait anyways if I were to choose Adobe. Adobe is just purely looking at valuation. Adobe is much cheaper. And with Netflix right now, you do have this whole acquisition thing. I would love to see the acquisition go through. If I were to choose between the two, probably Netflix, just because I can sleep better at night knowing that people will still binge watch shows. People will still create stuff, but then again, that there still is that, right? The bear case for Adobe. The bear case to me for Adobe is that they don't innovate fast enough, which makes people leave the Adobe ecosystem. So far, they've been successful, but you never know what happens in the future. Valuation-wise, I'd pick Adobe right now, but if I had to choose one of the two to keep it for a long term, and if Netflix does buy Warner, then I'd pick them. I'd pick them. But both are, in my opinion, good companies. So yeah, we have some avocado AI models here. Then as for Rocket Lab, wait, what time is it? Oh, we still have time. Rocket Lab secured about $1 million Canadian dollars from the Canadian Space Agency's Space Technology Development Program. Why are these names always so long? To develop a new 25 NMS reaction wheel for 500 to 1,000 kilogram satellites at its Toronto facility, targeting a low, LEO orbit. I forgot. I should know this. Low Earth orbit. Qu'est-ce que je suis con? And beyond, and expanding its existing wheels line. So yesterday, the stock did pop. I do think it's because we are seeing some movement with regards to Neutron. Yeah, I agree. I mean, even let's just leave the deal on the side. Netflix at $100, even without that deal, because let's say a week ago, we didn't know that deal even existed. To me, it was already a buy. Advertising business is growing and expected to grow quite considerably going forward. And so I would agree. Thank you for the super chat, Dzień dobry. The Grab coverage yesterday, my pleasure. And today as well, my pleasure. Dziękuję. Then, what do we have? I think that's it. It's a very, I mean, December is usually quiet. We just have, yes, this, the Fed meetings and some inflation data, and that's about it. But December is usually quite the boring month. It's the end of the year. People might be going on a ski vacation or just chilling, getting ready for for 2026. Because in 2026 we're going to go at it again. We've been enjoying, I would say we've been enjoying the last 3 years easy money, right? Am I Polish? No, I'm not Polish. I can just speak a lot of languages. 3 years of, I'd say, easy money. Now, is the easiest of the money, is that being made already and it's over? I would say in big parts, yes. I think in big parts, yes. That doesn't mean that you cannot be making money in 2026, because every single time we are going to get overreactions in the market. You're going to get pullbacks, and if it's a good company, you should just take advantage of that pullback. That's it. Netflix traded with lower PE than now. Stock could drop further. Of course, the stock could drop further. But if you're looking at free cash flow, I think they're in a much better place right now than before. Much better. If OpenAI collapsed, couldn't keep backrolling the AI industry, what AI companies would come off best? Obviously, Google. Google, Anthropic, for sure. XAI, for sure. But again, bankrolling, I mean, if you don't have the money, how can you bankroll the industry? I don't know. But yeah, to me, the whole OpenAI thing is my biggest worry, I would say. But again, if OpenAI fails, like I said, it's an Anthropic or a Google or whatnot is just going to pick up the pieces. Now, you're going to say, yeah, but OpenAI is quite close to Nvidia and AMD and things like that. So wouldn't that be an issue? Because if it's Google, then Google will focus a lot more on TPUs. Yeah, maybe, but Google is also offering Nvidia GPUs for Google Cloud. But yeah, if OpenAI fails, and I do think OpenAI might be too big to fail because of the amount of money that's involved in all of this, the amount of companies, countries that are involved in this, it's too big to fail. So they will find ways to find the money. That's it. The question here is how are you going to make this business profitable in the future and make sure that the adoption stays high for a long period of time. I talked about this on a show at the Motley Fool last week with Jose and Travis, and I guess that's why I said I understand why Sam wants to design and release a physical AI product, because how can you make sure that people only use your AI? Well, Apple has a phone, so I guess that's one way. Meta will have, or has already, right? Meta, the Ray-Ban glasses, the VR glasses, and in the future more of those. Google has the Pixel phone, the Android system, Google Cloud, and Gemini, etc., etc. But OpenAI has nothing other than ChatGPT, which is already a good place to be. But if they want to find ways to really, really monetize, because at the end of the day, you have to create a business. And just ChatGPT, having ChatGPT is not a business. Sorry to say, because yes, they might have 900 million monthly active users, but how many of those are paying for the service? What, 10%? Maybe? So how do you monetize all the rest? You monetize all the rest by releasing a product that might be very, very different to everything else that's out there in the market. I don't know what they're going to be designing, right? He bought that small company from Johnny Ives, which was, again, a name you didn't hear for the last 20 years because he did do one special thing for Apple 20 years ago, and that's it. And they bought the company for $6 billion. What are they going to design? I don't know. Meta last week did buy another AI hardware company, I think Limitless AI or something like that. Earlier this year, You had Amazon that acquired also a small AI hardware company. So everyone is trying to make a hardware product that's based on, or that only works with an AI model, because that's how you monetize, that's how you create a business. Having a chatbot is not a business, because the chatbot can be used for free. And it's free for me, it costs the company money. So we'll see. We'll see what they'll do. Again, for me, I hope everyone's successful. I have my bets, of course, on Google, for example. So we'll see. We'll see how that whole thing evolves. I've seen a comment about PayPal and World Cup. Has something been announced, PayPal and World Cup, or not? Or are you just saying that there is a World Cup next year in the United States and PayPal might benefit from that? I don't really see the correlation, to be honest, but yeah, we did have a price target, of course. Even worse than that. We have here Compass Point reiterates sell cuts the price target to $56. Branded checkout growth slowing. We've known about that. Analysts see potential miss versus consensus of 5.9% reported growth. EPS and total margin likely to hit low end of guidance. And the price target is reduced on lower 2027 estimates and valuation pressure. Sorry about that. Okay. I mean, we've seen a lot of those. Wells Fargo also lowered the price target from 74 to 67. I guess this is also making some space for 2026 price target upgrades for PayPal if it's not as bad as expected. Let the man dream. Let me dream a little bit. We'll see. Okay, so as you know, I'm not an options expert in all of it, but can you explain this narrative, mom? Buying leaps is a terrible idea. Markets have been up double digits for 3 straight years, and 2026 is a midterm election year. Midterm election years have never been positive. Correct. I've shown you this. Let me try and find it again. But why would leaps be a terrible idea right now, even if the market was up for the last 3 years? I don't know, maybe it's buying 2028, January 2028 call options. Let me see if I can find it. Who posted this? I think they did. Let's see. Oh, and Adam, good morning, or maybe to you, maybe good evening, because I think you're still in China, right? Let's see. I think it's them, but it's been a long time. See if I can find it. One moment. In the meantime, $2028 leaps. Okay. No, but I think he's specifically talking about Netflix, which has seen already a pullback right now, and that's why he's. I guess it depends who we're talking about here. Let me see, because it's true that in the 12 months before midterms, the market usually drops, and then after midterms, it starts to recover. The lowest pullback we had for the 12 months before midterms was, I think, 7% or 5% or something like that. And look, if we just purely look at what has happened in November, it might be our case, but then again, it might get worse. It might also get worse. Also, we are in a very different situation right now. Interest rates are expected to come down. There's this whole AI story, a new Fed chair that will be announced and will take his spot in May of 2026. Well, where is this thing? Maybe I retweeted this. Could also be helpful. Hello? Not sure. The car is being jacked. Yeah. But it's not my car. Netflix. Okay. Yeah. Ah, wait. What did I? Can I explain hypothetically what will happen if PayPal buys all of the shares after 10 years? It will be a private company. That's what will happen. If it continues like this for 10 years and the stock doesn't really move much, it will be a private company. 2022 was a midterm year. Yeah, okay, but 2022 inflation skyrocketed, interest rates went super, super high, super quickly. We just had 2020, 2021 when, every company was trading at 100 times PE and that was the norm. So I don't think 2022 should be considered a good example or an example at all. Same as 2020 or 2021, yes? Let's see. The search function on X should be much better. Aha, finally. See, I just had to say something like that. And we are here. All right, so quickly before the market opens. So here you can see, going back to 1926, the S&P 500 has seen an average drawdown of 18.2% in the 12 months before midterm elections. So just going back 60 years, the smallest drawdown has been 7.4%, while the largest one has been 41.8%. Well, that much sucks. 41.8%, that's not great. But after midterms, which is this part right here, we are up. On average, 3 months later, we're up 5.8%, 6 months, 10.5%, and a year later, we're up 14.8%. Now, where is that 41.8% drop? I don't know, but we had here in 2002, 33.8% was the largest drawdown before the midterms. But it shouldn't really surprise you because a year before you had 9/11. So you look at the specific dates here and you can try and understand why things really look quite bad. Again, here 2022, 25.4%. But again, it has nothing to do with the midterms, has more to do with specific events in the market and in the economy. So let's get ready to open the markets. I do want to try something. All right. A couple of seconds before the markets are going to open, and then we'll try and do one thing before I get the actual thing, which I hope it's not lost in the mail, but we'll see. We'll see. The markets are going to open in a couple of seconds, and ding, 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 bing, bing, bong, bing, bong. The markets are open, ladies and gentlemen. It is Tuesday, December 9th. Markets are open. We are seeing some red. Well, not some. I just lied. We are seeing a lot of red in the markets right now, at least for now. And I'll close the polls because you told me that 40% of you say that we are going to end the day red, 37% green, and 23% say flat. So we are red. Yeah, I think we can say we are red. Well, at first I was like, huh, Duolingo was green. Strange. But okay, let's go section by section, shall we? We shall start off here with the fintech names. So, fintech is red. Fintech is red. We do have some green, and that's Sezzle. Sezzle is now only up 4%. Again, Sezzle is included in this S&P small caps 600. I didn't know it really made such a big difference, but okay, we'll take everything that we can get. I know some of you are Sezzle shareholders. American Express is up 0.7%, Visa is up 0.3%, dLocal is flat, and then all the rest is red, with SoFi being down 1.5%. Again, same price as last Friday and yesterday, so shouldn't really be that crazy, or you shouldn't really overreact is what I want to say. Webull is still here, under $10. Pagaya is down 0.5%, PayPal 0.4%, and then the rest here doesn't really move that much. With regards to the NeoClouds, we have Nebius that's down 3% today, CoreWeave 2.2%, Iron 2%, Hut 8 1.7%, White Fiber we have here 1.7%, and Cypher is down 1.8%. Chip names, we only have the mighty Intel, that's green for now. All the rest is red. So the market clearly doesn't really care that much about this whole Nvidia China stuff. Okay. Marvell is still down 2.4%, probably still digesting this news/report from Benchmark yesterday that they might or might not lose Amazon, Trainium 3 and 4. AMD is down 1.2%, and then the rest is down almost 8%. As for big tech companies, we have Netflix that's basically flat at the moment. Tesla is down. Tesla is down 0.7. Wait. 0.7%. Google, again, pre-market, I guess it was down a little bit more, but still fine. 0.2% down. Meta 1.3%. I guess maybe the market is not happy with the avocado naming. Maybe the avocado naming was not well received, or it might be also because, well, Google will launch their own AI glasses in 26. Going to be excited about that. Apple is up 0.3%. Apple is really that stock that I just don't get it, but okay. Amazon down 0.5%, Microsoft 0.1%, and Oracle is basically flat. Oracle, as you know, tomorrow after the market closes, they will report their quarterly figures. Then the general list. Applied Digital is actually up today. So okay, wait, why is Applied Digital not on my list here? That's a stupid mistake. So Applied Digital is up 2%. Interesting. Oscar is up 1.5%. No news here. I did see someone talk about some comments from Trump, I guess, about insurers and all of that. Fine, but I guess, I mean, with Oscar, I still think 26 is going to be a good year. They're well prepared to face the headwinds. Okay, Rubrik is back green. I don't know what happened pre-market. Maybe it was a bug. I don't know. But Rubrik is back above $90. HIMS is at 1.2. So again, closing in on that $40 mark. Shopify almost up 8%. And we are seeing some stocks recover. Shift4 is at, this is a dangerous number, 66.6. It's 3 6s. Not great. Salesforce is flat. United Health, greenish, 0.3%. Adobe 0.1%. They report also tomorrow. And yesterday, Shift4 was down. I don't know if there was anything specific with regards to Shift4. And again, Jarek Isaacman has not been CEO of the company for the last couple of months, so doesn't really change that much. Mercado Libre is down 0.4%, so back under $2,100. Zeta is red still, but still sits at $19 or so. AST is at $73, down 1.3%. Hood is down 1.1%. And BMNR is down almost 2%, but still at $35 for now. Okay, if the NFL and PayPal is legit, will you pay with PayPal in the SoFi Stadium also for FIFA World Cup? Well, first of all, I don't have unless someone has a spare ticket for me for the game at SoFi Stadium, I don't think I will go there. Second of all, I am pretty sure, I mean, if I have to pay something, if PayPal is available, then I'll use it. But I think at SoFi Stadium, they're probably using Shift4 for payments. I think so. Do I like new holdings? I do like new holdings, yes. I just have... I think Latin America as a market is a very, very appealing one, which is why I'm extremely bullish on Mercado Libre. But new holdings, yes, I like very much. Is this a good entry point for Shift4? Well, this is just my opinion. I hold it. I bought more last week. My average is still higher than where we are right now. It's $76. So I like it at these prices. I think it outperforms year on out. When I say it outperforms, it doesn't mean that it's going to outperform tomorrow or next quarter. I think if I'm buying today, I will outperform the market going forward with that name specifically. Great game at SoFi Stadium last night. What game was there at SoFi Stadium? NFL, I assume? Monday Night Football. Monday Night Football. Tonight, there are big games tonight. In the Champions League, we have Internazionale against Liverpool in the Champions League. We have Atalanta against Chelsea. This is a good one. I think Barcelona against Eintracht Frankfurt. And tomorrow is a very good one. Real Madrid, Man City, or Man City, Real Madrid, can't remember. I've heard reports that if Real Madrid lose, then they'll fire Xabi Alonso, which to me is ridiculous. It's just a spoiled brats team at this point, Real Madrid. Only one game last night. Indeed. I performed very well last night, I have to say. Manchester United did concede a goal against Wolves, but I did provide some assists and score a goal myself. So yeah, pretty good performance if I do say so myself. By what date stocks catalyze? Probably after the World Cup, when you actually, or no, either the quarter before the World Cup. Maybe if they give some upside guidance, but I think you're only going to see it after the World Cup. So Shift4 processes payments at SoFi Stadium. Yeah, I think they process payments at most stadiums in the US for sports. PayPal will eventually stop buying back shares. It is possible that they shift that money for extra dividend. No way. They will continue to buy back shares until there are no shares available anymore. To me, I hate dividends. I'm not a dividend investor. I don't want to get a dividend. I want them to buy back as many shares as possible. Let's see if we do have some. No, not really. Not really. The local is up 0.3%, but that's about it. All the rest still struggling. SoFi is still down 2%. NeoClouds, we only have Applied Digital, that's green. And as for chips, basically everyone's red. Maybe Micron, but it's probably going to be red pretty soon. Rocket Labs at $51. Very nice. Why am I anti-dividend? Because if I was a dividend investor, I would take specific stocks for dividends, but I'm not. I want my companies to buy back as many shares as possible if it is extremely undervalued, and not use that money to pay a dividend, which I'm getting taxed on quite heavily anyways. Buybacks I do not, and buybacks I gain more than a dividend. You can always issue a dividend in the future, but in the future your stock will probably not be as cheap at where it is right now. So that's basically why. Again, I do own stocks right now that do pay me a dividend where they didn't before. I mean, dLocal pays a dividend, they didn't before. Meta pays a dividend, Google pays a dividend. Who else? I think Micron. But I didn't buy those companies for dividends. So, what is this? So yeah. I assume you mean Adobe versus Salesforce. Which one would I pick? What happened here? I don't know. Something got unplugged, but I don't know what. Good question. Salesforce, Adobe. I don't know. It's not similar companies, of course not, but it's very similar movements of stock and sentiment. Right? Adobe again will report tomorrow, but you could say that a Salesforce, since it's, I mean, even an Adobe's, a lot of enterprise and big companies use it. I don't know. I would probably say Adobe at the moment. They're also growing a bit faster than Salesforce at the moment. AppLovin. What has happened with AppLovin? Wow. Okay. That is crazy. That is crazy. Are they still being investigated or something, right? Because that has been some of these stories. A huge turnaround from, wow. I sound like Owen Wilson. Wow. 42% for this company since the end of November is not bad. Not bad at all. What does Grab do today? It's again, like I said yesterday, it's just on that 200-day moving average. If it holds, it rebounds. I mean, it usually does rebound when it touches it. So. Roblox is the other one we talked about yesterday. And Roblox yesterday was up, and today it's up as well. It is under the 200, but is going to try to make its way back above it. Roblox is a crazy thing. I mean, I don't have kids. I know some of you do have. I know some of you actually buy Robuxes for your kids. It's crazy growth. I mean, 100 and what did we say? 150 million daily active users on Roblox. It's crazy. Hours engaged last quarter, 39 billion. It's insane. It's insane. And I saw a post, I can't remember where they talked about. Yeah, no, but I mean, Roblox is not for someone like you or me. I downloaded it once, like 2 years or so ago, just to see what the fuss is all about. It's not for me. It's under 13 and just over 13, although right now there are more over 13 years old on the platform than under. But yeah, there was a post that talked about the fact that they don't monetize the platform. I was like, huh? what are you talking about? They literally have Robux, which is the currency that you buy to buy stuff in the game. But from an advertising point of view, again, since this is mostly a kids platform, which is also why they do have a lot of issues on safety, predators, and pedos and whatnot on that platform, advertising on it could be tricky because, well, you're advertising towards kids. How can you do that in a legal and normal way without being too aggressive? But I guess at one point they'll be able to do it. They just advertise to users that are over than X years old, and voila. But yeah, it's a platform where the safety issues for kids always rise, I would say. It should be they could tackle it, I would say, quite easily, just like other platforms do. Like it's to their benefit if they can 100% or 99.9% tell us and show, look, we know how to tackle these things, it's safe, they are going to be benefiting from it. Because I still assume that there are way more normal people than predators that go on that platform. But yeah, I mean, it's still a huge game, very popular. I never understood why. I mean, the games are very stupid, especially this steal the brain rot, or I don't know what the kids these days like to play. I don't understand. I don't understand this. I mean, I'm more of a, what did I play previously? Even today, Fortnite, Call of Duty, FIFA, Age of Empires. Age of Empires is my go-to game. You give me Age of Empires, I can play it for hours. But the Roblox is not my thing. Crash Bandicoot, incredible game. Crash Bandicoot, Ratchet and Clank. Okay, GTA, whenever that thing will come out. So Take-Two, what are they doing? They're still quite high. Ratchet and Clank, I love it. Daxter, also very good. God of War, very good. Far Cry, the first one was great. Age of Empires was broken with some nations. Yeah, I still see some clips today. Because yeah, so some units are indeed broken. I still remember all the cheat codes. I mean, the fact that you have this game, you can play it with cheats or without cheats. It's such a good game. Such a good game. Counter-Strike, of course, a classic. I did play Command and Conquer, yes, but much less, but also. Did I play this? Civilization 6, did I? Maybe, yeah, but I think I played, let me see. Did I play 3 or 2? Okay, 3 looks like this. Yeah, no, okay, I didn't play 2. I think I played 3 or maybe 4 then. Yeah, 3 or 4 I played, I think. But also not for long, Take-Two, so GTA 6, apparently GTA 6 costs closer to what, $2 billion or so to make? I saw an Instagram reel, whether or not it's true, I don't know. Actually, let's ask the Google. How much did GTA 6 cost to make? Wow. Okay. So apparently, the combined development and marketing costs could reach $1 to $2 billion to make GTA 6, a game that we don't even know if they're going to release it or not, because it's been delayed time and time again. But between $1 to $2 billion, can you imagine how much money they are going to make from this, or they have to make from this to recoup it and actually make a profit? It's crazy. I'm pretty sure that it's a game that's going to cost $100. I think. Indeed, there is. Indeed, there is. I see some. I see some YouTube shorts and clips from time to time. Total War games. What is this? I mean, just an FYI, right? Because for the non-gamers out there who think that we waste time and we are nerds, if it was not for gaming, we would not have Nvidia. We would not have this whole AI thing today. Just so we're clear, gaming is the reason why Nvidia is alive and survived and became the company that it is today. I don't say this, just listen to Jensen's latest podcast on Joe Rogan. 150 minimum for GTA 6, or PC and PS5. Man, I think we should all start buying small data centers to run these games on, because this is getting ridiculous. Borderlands is 100? What? Borderlands 4? Borderlands 4 is $70. I see it on Steam. Or maybe 5? There is no 5. There's just 4. That's crazy. $100 for a video game. S'en fout ces gens. N'importe quoi. Yeah, I mean, the first time I heard about Nvidia was also because of games. Medieval Total War. Oh yeah, again, let's go to that. Ah, this game. Oh, this looks like fun. Yeah, this looks like the videos you see on YouTube, the simulations. Like 100 monkeys against 100 tigers or whatnot. Yeah, I know. I get weird videos on YouTube. It is what it is. Sacre bleu. Yes, I agree. He hasn't even completed one vertical push-up on. I mean, everybody's laughing about Alex Karp doing it, but the amount of strength, core strength you need to be able to do this is insane. But yeah, it's crazy. I mean, Jensen is also the fact that, I mean, he basically said it, right? He's more afraid of failing than being, let's say, energized, powered up to succeed. Which is probably why Nvidia just continues to execute like crazy. And I think a lot of CEOs should or could maybe learn from that. I mean, Zuck is probably also one of those. Zuck is also one of the only few ones left of founder CEOs out there. I think what Jensen, Zuck, and Elon. And although people will say, yeah, Elon bought the company from someone, yeah, okay, fine, potato. But yeah, I did not play Lord of the Rings Battle of Middle Earth, but I did talk about this game 2 weeks or so ago with my cousin. I don't know how it popped up. Non, je suis pas canadien ni français. Je suis belge. Zuck, Jason, Elon, and Larry. Jensen and Leia. Correct. All right. We do have some more green action. What is... It's my table. My electric table has been unplugged. Standing desk, my fellow viewers and chatters. Very good move. So we do have a little bit of green. For fintech, still in the red is MasterCard a little bit. Same with Visa. PayPal is still red. Adyen. Maybe we should revisit Adyen. Dutch company, payment processing. It peaked back in February. It's down 30%, almost 30%. Okay, maybe worth a revisit. Pagaya is the usual swings right now. It's down 0.6%. SoFi is now recovering, down 1.1%, and Chime is at 1%. Ah, yes, we forgot about Figma. Figma is has also recovered a little bit from the lows here, but not by much. Not by much. And Shift 4 is now also green. We're happy with that. Again, now that they have $1 billion share buyback program, they can also take advantage of that, and I think they will. I mean, they've been very clear why they do it, and they are doing it because they believe they are extremely undervalued, so I like to hear that. I like to hear that. As for big tech, Tesla is green, Apple, same place, Oracle is flat, Netflix is flat, Amazon, flat. Same with Microsoft. Google is down 0.5%. Okay, big deal. And Meta is down 1.6%. As for the general list, we have HIMS that's back above $40 at the moment. First name and last name, how are you? So that's back here, 40. Rubrik is doing well. Shopify, 160. Shopify is, again, it's one of those companies where you think, oh, it's extremely, extremely overvalued, super expensive. It is expensive, but you shouldn't really be looking at Shopify from a P standpoint. You should be looking at it from a free cash flow standpoint and looking at the results in GMV, how much GMV growth there is for that company. Because you're probably, unless we do have some April crashes again, you're probably never going to get a Shopify stock for very cheap. Oscar still holding above $17. Palantir is at 182. I think that's it. Duolingo, yeah, Duolingo has been rebounding a little bit. Any news? No, I think it's just recovering from the big hit from before. Let's see. Yeah, let's have a look actually at some energy players. So we have Enphase. Where are they? Still in the 30s. Okay, so that doesn't move much. Well, it was actually at $26. This is some insane chart. Enphase, crazy. First Solar is doing much better. Yeah, much better. First Solar is here at $258. Was at $118 in April. Since First Solar is not really that, I mean, it cares a little bit, but not much what happens with interest rates and things like that. It's not really in the residential market. So pretty good. What else do we have? Sunrun, I think so. What is it? Run? Yeah, Sunrun's another one. Okay, that's also seen a nice recovery. And then what is it? Sedge, SolarEdge is another. Yeah, also a nice recovery from May. So it's only Enphase that's been suffering for a long time. Where's the trade desks? Still 40? Yep, 39.3. So I think the trade desk is going to stay around these areas until the next earnings report, because they said they are going back into growth, especially in 2026. Market is now probably waiting to see the confirmation of that, or or if they're not, then I guess it will stay at those levels. But valuation wise, it's definitely much better here than here, or even here, and definitely here. It's also a place where previously it has bottomed before. Definitely. Another company that was also never cheap that did drop is Axon, and Axon, okay, did recover a little bit, but not by much. Here as well, it's still not cheap, but it's less expensive. That's the thing with these types of names, is that sometimes getting it less expensive is better than waiting and never getting it for cheap. Opinion on Vichy, it's the dividend-paying REIT, I would say, one that's very focused on Vegas, casinos, hotels, golf courses, I think as well, bowling alleys and all of that. I mean, the dividend is nice. Stock-wise, it's been doing nothing, right? Literally nothing. If you're just looking for pure dividend, I guess this one is it. But if you're purely looking for dividends, I assume there are some other stocks out there. I mean, what is the yield here? Approximately 5.9%. Not bad. Not bad at all. What is it? BTI? British American Tobacco. I think they're still very high. No, 6.2. Yeah, okay, the stock has recovered. What's the ticker for the other smoking thing? Aria? No, not Aria. You have BTI for British American Tobacco, and then you have the other company, Altria. Altria Group, the dividend there is 7.4. Now again, tobacco companies, I don't know, some people have an issue with that, but I guess when you're looking for dividends, you don't really care. You don't really care that much, but yeah, some people do, so up to you. Any thoughts on Amcor? No, I know it's been performing very well. But no thoughts on that. Same as like MP Materials or USAR, USAR, whatever you want to call it. I don't follow it, so I don't have to have an opinion on everything. So yeah, that's that. SoundHound, where is it? If it's above $10, I'll close the stream. Yep, okay, I guess it's time to close. It's at $12.40. I don't see what their competitive advantage is. They're still losing quite a ton of money. Let's see what happened actually last quarter. So it's a $5.3 billion company generating $150 million in revenue. And last quarter, year-to-date revenue was up 127%. Yeah, but it's probably including the acquisitions. Yeah, it's still including the acquisitions. So I don't know. I'm not a big fan of the company. Again, revenue can grow, but it's also growing because it's inorganic, and the losses are increasing. And they dilute quite a lot. Of course, if you bought it for $1, who cares? I mean, you probably already exited. But there's nothing that special about it. Philip Morris, yeah, is another one. Realty Income, yeah, is the monthly paying one. Usually monthly paying REITs or monthly paying dividends underperform, but they've been doing quite well. Opinion on Novo Nordisk. I mean, my opinion on Novo Nordisk is probably similar to my opinion on Nike. Some of you probably think I'm crazy. Like, what the heck does Novo Nordisk have to do with Nike? It's nothing to do with Nike. It's just that both of them are going through quite a lot of changes, restructuring, new CEO. And these things, especially with these types of companies, they do take time to go into effect. Now, Nike, it has been going on for a while, so I do expect to see some signs already in 2026 of a recovery. For Novo, still in a turnaround, still a turnaround story. And like I said previously, the stock previously looked cheap and was cheap when the stock was higher. Why is that? Because guidance was higher. They were expecting to grow faster. Now we are lower, but we are lower because they're expected to grow much slower, much slower. And so it suddenly went from one day to the other, went from a cheap stock to a, I guess, not that cheap anymore. But will it outperform over the long run? I do think that if you look Novo Nordisk versus I take again the Nike comparison here, I think Novo does outperform. Nike will probably pay you a dividend in the meantime when they start to recover better and better. But I'm not that interested. Jolts are out. Okay. If you do have a number, let me know in the chat and we'll pull it up. We'll try and pull it up. We are going to pull it up. This account or this account is fine. So US JOLTS job openings surged to 7.67 million in October, one of the largest surprises this year. September came in at 7.658 million, also beating the 7.2 forecast. The leading economic index matched consensus at negative 0.3%. The implications for Fed policy are immediate, markets pricing in a December cut, but robust job openings complicate the dovish case. Yeah, no. Strong labor market, strong labor demand suggests wage pressures could stay elevated. I mean, robust job openings means that people are still hiring. So whoever wants to find a job, I guess there are still possibilities to do so. Strong labor demand suggests wage pressures could stay elevated. But I don't think it complicates the dovish case. I think if it would have been, like if job openings were much lower, I think that would be a problem. Because if you have like unemployment going up, but jobs opening going down, then you are in a tricky situation. But in this, unless I misread this, but I'm reading it again and again, and I'm like, I don't see why this is an issue. Chat, what do we think? Let's have a look at the heat map if we're seeing some improvements. In the meantime, this is the heat map. We did have also an Accenture Anthropic announcement. Probably going to see it quite a lot. Yeah. I mean, yesterday we had this part right here, green, and all the rest red. Today's a switcheroo. Apparently, Google Cloud said that the Pentagon's Chief Digital and AI Office has selected Google Gemini for Government as the first enterprise AI deployed on US Department of War Gen AI platform. Another day, another win for Google. Yeah, I mean, tomorrow definitely gets us a lot more information. Again, some people are saying here the market is taking a stronger job market to mean a lower probability of Fed easing. I don't see it that way. I see it as we are now in a situation where we can lower interest rates, which are going to help quite a lot of small businesses, definitely housing in the United States. If you can do that while still having unemployment in check and a strong job market, then why not? And it's not like inflation is heading back higher super quickly. It seems to also be under control for now. So, yeah. But yeah, I agree. Tomorrow, I guess we will get more information. Well, information. More comments from Jerry, little Jerome. The big question is if they ease rate cuts because economy is strong, that's also bullish. Correct. Correct. And again, I still think we are again high, still high. So it gives them the option to cut 25 basis points and then see how and where we go from here. This remains unchanged from yesterday. I would agree. Slightly elevating inflation in favor of housing and more jobs is more. I agree, especially because the housing market has been, I would say, destroyed for the last 2-3 years. And if AI is deflationary, then inflation will be taken care of, and it seems like it will. But again, are we going to be going back to the 2% or so? I don't know. But even if we stay just above 2%, but you can help housing and jobs, I think you should definitely do it, for sure. Let's see. Are there any stocks which you are watching right now with a chance to double in the next year? I always hear about your Hood, SoFi, Palantir, etc. You do not hear about my Hood and Palantir from me. I can promise you that. Although I did own Palantir and Hood, but it's been a while since I've owned them. They've done very well, but SoFi I still hold, and I still think it will do very well. Double next year. I mean, you are putting me on a tough spot with doubling next year. I mean, if I knew exactly which stock would double next year, I would put my whole fortune and take a loan from the bank and put it in the stock, because doubling in a year is usually very, very difficult to do. But let me rephrase maybe. What stocks do I think will still do very well in 26 and onwards? well, there are still stocks that haven't moved much. Shift 4 hasn't moved at all. I still think Oscar is going to move in 26, especially if they execute and they achieve profitability like they told us. PayPal is one where if they finally actually show us some strength, especially in the heavily focused branded checkout part of the business, of course I'm going to say PayPal, then yes, it will jump because the rest of the business has been doing and growing quite quickly. It's just a question of will management will actually be excited to talk about the positive things, or are they still going to talk about all the negatives? After that, okay, Google probably not anymore, at least not in the next 12 to 24 months of a doubling. But yeah, you could see quite a lot of surprises because there are a lot of companies like a Nebius, exactly. A Nebius, for example, if they do achieve their goals, right, with that huge exit rate in ARR of what, $8 billion, then why wouldn't it double from here? But again, it's only if they achieve their goals. And we will have time to cover and see if it is realistic or not. And again, if it doesn't double in 12 months, who cares? If it will double in 2 years, that's also good. It's very good, actually. I know we're very used, especially in the last 3 years, to have stocks double in less than a year, sometimes in a month or two, but it is not normal. If you tell me that, oh, your portfolio will double in the next 2 to 3 years, I'll take it. I'll take it any day of the week. Because if you can double every 2 to 3 years, you are a legendary investor in the making. You don't have to look for easy doubles every single quarter or so. But yeah, there are some names that have not participated in the bull run that I do think in 2026 they will have a chance to outperform because they'll show, and again, they have to show that the business is worth buying and that the market has got it wrong. And there are many of those businesses. I own some of them. I don't own all of them, obviously, but I own some of them. You probably own some of those as well. Iron, Nebius, CoreWeave. CoreWeave will be much, much higher if next quarter the market suddenly realizes, oh, wow, the backlog is huge. They're already generating billions. There's no delay anymore. And just like that, the stock jumps probably 20% or so. Thoughts on Alibaba? Yeah, I own it. I owned it going into 2025. I bought it going into 2025 because it was, again, contrarian, I know, but it was getting to a serious, stupid situation where the cloud business started to do well, international was still doing well, and yes, it has been a very good year. It's a good, still, I think, in my opinion, defensive stock to have in the portfolio. I understand the China risk and people don't like it, etc., etc. Fine, you don't have to buy it. That's why I bought it. You don't have to. But yeah, I still own it. I still view it as a good hold in my portfolio. Like I said previously, United Health is another one, non-AI, defensive, contrarian one going into 2026. You'd say, oh, but I already missed the run from, 240 to now? No, okay, it recovered from the really low 35%, but they still expect EPS to grow nicely in 26 and continue to grow from there in 2027. If they go back into that growth mode, especially earnings-wise, it's very cheap here. And what? Let's say it doesn't. Okay, let's say it doesn't go back to 600 anytime soon. Let's say it goes to 500. You're still making 50% here on this stock. It's pretty good for a non-AI stock. Now you're gonna say, yeah, but United Health insurance in the United States facing a lot of headwinds. It's still United Health. They're not going anywhere. They're not going anywhere anytime soon. So yeah, there are definitely a lot of a lot of stocks in the market that even if they participated in the bull run of this year, they, in my opinion, can still perform very well, very, very well next year. Where is it? Mercado Libre is probably not having the best of years, but this is one I'd own and sleep very well at night. Fiserv, no. Fiserv, not yet. I wouldn't say, I guess not yet in the same boat as United Health. Probably give them like another quarter or so in order to get their shit together, as they say. Because it might look very cheap, but there are still some issues going on there. They're also making some changes. You would like them to show you first that they're going in the right direction, instead of jumping in now because it's done quite a lot. Again, you might make money before they report their next quarterly figures, but you're also flying blind here, so it's a bit of a gamble. With these types of situation, I rather wait, and yes, pay a small premium, but at least I got my information. Moderna. Moderna, where is it? Oh, wow. Okay. Again, with these types of name, Moderna or Pfizer or whatnot, you need to learn about the company, the pipeline, the products that they're going to release. If you're into those things, then fine. This is Moderna. If you're into those things, then fine. But you really need to put the effort with these types of companies to study the pipeline, the roadmap. I'm not interested in that. So it might perform very well from here, but again, it all goes back to you need to know what you buy and why you own. Melli has a good chance to outperform not just next year, but for the next decade or so. Google, look, I'm not trimming Google because they give me zero reasons to trim Google. I'm not buying more Google here, but I'm very happy with the position that I have, and I'm pretty certain they'll continue to perform well. Obviously, not as well as this, but this only happened because the market was putting Google under pressure. Yes, there were, of course, the DOJ case and this whole thing going on. But yeah, don't expect to have these types of reactions with Google every time. Nvidia is not supposed to rally because, again, the market, one does not believe that, or does not trust that China will say, okay, now it's fine to go and buy Nvidia chips. It's one thing to say Nvidia can now sell H200s to China. It's a whole other thing to say, oh, Chinese companies are allowed to buy Nvidia chips. But we'll see. Anyways, it doesn't matter. It doesn't matter for now. It's a nice to get, I would say. SMCI, you know my thoughts on SMCI. I see no reason to buy the company. Me personally, I don't trust the management, and they haven't done anything to show me that I should trust them. It's like every guidance that gets put at the start of the year or at the end of the year gets revised on the downside. It's a very, very low margin business. Yes, if you look at it from a price to sales perspective, oh, it's very cheap, fine. But you buy SMCI for what reason? Because you like the business? If you like the business, Dell is doing also the same thing, plus you get all the rest of the Dell business. And Dell has higher margins than SMCI. And doesn't have filing issues, doesn't really miss on their own guidance by $6 billion or so. So again, I understand that SMCI might seem attractive. It was certainly getting a lot of attention when they were almost delisted again, but I just don't see why. PL is interesting. What is it? Planet Labs? Yes, it is. Dell is no growth. If Dell is no growth, then why would you buy SMCI? Dell is no growth, yet Dell has grown revenue 10% over the last 12 months, and it's expected to grow revenue 12.4% fiscal 26. That's $107.4 billion. You are growing revenue that is at $107 billion, 12%, and then yes, it's dropping here to between 5 to 6% afterwards. And again, it's higher margins. Gross profit margin last 12 months, 20.9%. If we look at SMCI, first of all, again, you are seeing more growth for revenue. But if we look at this right here, last 12 months, okay, fine, only 12%, expected to grow 45% for the year, $31 billion. Then 25%, 20% to reach $48 billion. Still, much, much smaller than Dell. Of course, that's why it's trading at a different market cap. But what's up with this? What is this? It's nothing. So yes, it might be growing faster than Dell, but who cares when your gross profit margins are 10%? Dell is double that. Again, I don't see the point. And I said Dell because they are basically in the same business, plus Dell does other things as well. But what's so interesting about an SMCI? Is it the servers? It really is shitty margin business. It may be better to buy quantum ETF. No, I don't think so. I don't think it's quantum is a good ETF or whatever to buy. If you're asking me. My favorite quantum stock, even though you're not a quantum buyer, is probably one of the big tech companies. It's probably one of the big tech companies. None of the specific zero revenue billion-dollar quantum names out there. Like Google, Microsoft, Nvidia, Intel, IBM, all of these companies are all in quantum, and if quantum really becomes a thing, I'd rather go with them than with a quantum computing company that used to be a beverage company. So, what is PayPal doing? PayPal is still red, 0.4% to be specific. Pagaya is also down. SoFi is down 1.4. Visa, Adyen, they've also down. Then the rest is green, with Sezzle being up 5%. Yeah, I mean, at least with this, you get an instant result. Either yes or no. Very easy. All right, let's do a last round here, and then we can all go outside and touch some grass for the day. By the way, I do appreciate all of you joining me again today. I know some of you might be new here from yesterday's stream, so I appreciate you giving me the chance to entertain you yet again today. Of course, we will be back tomorrow. So Nebius is still down 2.2, White Fiber 0.5, CoreWeave is up actually now 0.9, Hut 8 1.7, Iron 1.6, Cypher 2.3, and Applied is up 3%. I do wonder what Core Scientific is doing. Okay, so probably yeah, following CoreWeave, even though there is no relationship on the agreement anymore between them. As for the chips, we have Micron that's still green, AMD green, Broadcom, they report Thursday. Lam is green, Intel is flat, and then the rest are down less than 1%. Unless you're Marvell, you're down 1.8% right now. Big tech companies are all red besides Amazon and Tesla. Meta is the one down 1.5%. The rest is 0.2% tops. Rubrik is up 3.2%, went from down 4% or so at one point to now up. I don't know what the heck was going on there, but okay. Adobe is up 1.2. Oscar is now only up 0.1. And yeah, Duolingo is up 0.8. What is this line that I drew? It's this line. Okay. And that's it. That's it. Okay, it's a bit better now than when we started. I mean, when we opened the market, I would say. A bit better than right now. Will I be streaming the FOMC meeting tomorrow? Probably not. Probably not. But we'll cover what happens anyways. But probably not streaming the FOMC meeting. I'll be live tomorrow morning as always. Maybe actually, because Oracle is tomorrow, so maybe we'll do a stream with Amit and Jose. We'll see if everyone has the time for that. But we shall be back tomorrow. We shall be back tomorrow morning. So everyone should be happy for that. I do appreciate you all joining me this fine Tuesday. Thank you all, and we shall see each other tomorrow morning. Bye-bye.